Hello there and welcome to the most watched business show in the country. This is the Business Weekly Show here on Citi TV and I am your host, Michael Obudu. In the next 1 hour, I'll be bringing you a wrap of all the major business stories for the week, including a series on the impact of the depreciation of the cedi on various sectors of the economy. If you're ready, let's go. Have you been to the Forex Bureau lately? Have you heard that the dollar now sells for more than 10 Ghana cedis? This is just alarming. It was just about 6 Ghana cedis in January, and now here we are. The most alarming part is that some economists believe this might get worse because, according to them, it will take a while for recent interventions announced by the Bank of Ghana to help stabilize the depreciation cedi to begin to have an effect.
A visit by Citi Business News to some Forex Bureau and banks within the capital shows that some are selling a dollar for 9 cedis 98 pesos, whilst others are selling it for 10 cedis 10 pesos. According to some of the Forex Bureau operators, there is also a shortage of the dollar on the market. They also say the situation is bad and could get worse in the coming weeks. Data from the Bank of Ghana indicates that the Ghana cedi has lost more than 25% of its value year to date. The situation comes barely a day after the bank announced an increase in the monetary policy rate by 300 basis points. This intervention, according to the central bank, is part of efforts to tame soaring inflation and the fast depreciating local currency. Reacting to this situation, economist Courage Boti stated that it will take some time for the interventions to materialize.
It has changed, right? I mean, it's still a matter of demand supply. Like I alluded to earlier, for over 8 or 9 weeks now, the Bank of Ghana hasn't done any spot market intervention. They've scaled down the size of the bi-weekly auctions, and we see also that the market is reacting to the latest credit downgrades. So these, you would say, are residual demand on the market that are driving the rate, and until that backlog is cleared, some of these issues will linger. The proposals to buy FX or working with the mining companies to buy FX from them to build our reserves are not things that have been done. There is $750 million loan from Afri-Exim Bank. I believe is yet to hit the account. I hear a co-hit account by this week. And then, of course, the many other interventions, like the cocoa syndication loan, is yet to hit the account. So investors will be looking at your reserve at 7.6 billion, and then your net reserve at some 3.6 or 3.7 billion, which is still very way short of what levels they were in the past, really. These are the fundamentals that will continue to drive the market until something changes. Immediately, Bank of Ghana raising the policy rate yesterday, it will mean that it will take a while for liquidity within the system to be mopped up. And you'll see that in the interbank interest rate, adjusting upwards gradually. So its effect ultimately will come over time, but not instantaneously.
It's interesting that the issue with the depreciation of the cedi is influencing people's investment options. A lot of people, among other things, are beginning to buy dollars. Many believe this could help protect the value of their monies.
Even though 2021 was not as bad as 2020, it has been described by investment analysts as a tough year for the global economy, with uncertainty mainly over when the COVID-19 pandemic was going to end. This was because the outbreak of the COVID-19 pandemic posed a major disruption to economic activity across the world. Fast forward to 2022, and Ghana, in addition to the lingering pandemic, has to deal with the impact of Russia's war in Ukraine, a situation that has further disrupted Ghana's promising recovery from the COVID-19 pandemic. This has led to a myriad of issues, including an increasing level of hardship among the populace, continuous increase in the inflation rate, rising debt situation, sharp local currency depreciation, and recently, 2 downgrades by 2 international ratings agencies. This has also seen investors moving their funds from traditional mutual funds and other locally issued investments into safer investment vehicles like government treasury bills and bonds. Kojo Adaimensa is the Group Chief Executive Officer of Databank, and he breaks down why local and international investors will opt for such safe havens.
People are actually, moving money away from our traditional mutual funds accounts, not at the retail level as much, but at the corporate level. So institutional investors is where we are seeing most of the movement. We are not seeing it that much at the retail level, precisely because, at retail, there's flexibility. It's more short-termism. So people think, moving it into a 3-year bond locks them too long. But if you have a pension fund, if you have a trustee and a fund manager who are looking at a 10-year horizon, then naturally, it's only rational. I mean, as we say in economics, we are all rational beings. It's only rational that they will be moving the money into the higher yields, albeit longer terms.
Government of Ghana bonds, for example, which brought in low yields during some part of last year, have rallied in recent months. At the beginning of 2022, the yields for these bonds ranged between 19 and 20%, but they are currently hitting 30%. Kujua Dimensa explains again the impact that the situation will have on government and businesses in the country.
When people are buying bonds or T-bills, they're actually lending money to government. So government needs the money. So the implication for government is that they are now borrowing at much, much higher rates. Just a year ago, not long ago, government was borrowing a 91-day T-bill at 12 or 13. Today, they are borrowing it at 26, 27. That is high. That means that the future repayment is high. It's not good for government to be borrowing at such a high rate, but the situation demands right now that they borrow. Now, what's the implication for business, for businesses that, especially businesses that borrow? You know what's going to happen? I'm a bank. Let's say I'm a bank. So Natali Bank Limited, you have deposits that you need to figure out what to do with it. You have two options. Either you lend the money to government or you lend it to a businessman, okay? The businessman comes with risk, comes with, all this collateral, blah, 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 blah. The implication is that the bank is unlikely at such high yielding Government of Ghana rates. The bank is unlikely to be willing to lend to business because they're going to lend to so business enterprise at what, 35, 36, when I can lend to government at 30, supposedly, in quotes, supposedly risk-free. So the implication is that, it's something we've been reading in economics since I was in O-level. We are crowding out the private sector. And the situation we find ourselves right now is real crowding out of private sector.
Many sectors of the economy are being affected by this rapid depreciation of the cedi. The construction sector of the economy is one of such, and cement manufacturers had hinted that they would be compelled to increase prices soon. According to them, this is mainly because most of their production inputs are imported. There were rumors that a 50-kilogram bag of cement could hit 68 Ghana cedis from the current price of 59 Ghana cedis. The depreciation of the cedi since the start of the year continues to impact negatively across sectors. It has also compelled the total debt stock for Ghana within the first 6 months of the year to increase by about 41 billion Ghana cedis. It is already threatening the operations of traders, persons in the mortgage industry, businesses at the ports, among others, whose businesses rely heavily on the US dollar. Manufacturers of cement are no exception. Edward Edusei is the commercial director of indigenous firm Jata Cement. He has been shedding light on how this is impacting their operations. He spoke to the media on the sidelines of the Ghana Business Standard Awards 2022.
Most of our inputs are imported. About 90% of our inputs are all imported. So obviously, when it goes up, then you need a lot more cedi to import the things that you were importing previously. And when your cost of production goes up, then obviously you also have to go up to make up and be able to sustain your business. We try as much as possible because we all know that what is affecting the economy, so we don't add up to it. But it gets to a point as a business, you don't have any choice but to go up. But as I have said, for now, we have not come up officially to go up.
The Ghana Chamber of Construction Industry is concerned about news of a likely increment in the cost of cement in the country. They believe it would hamper efforts to improve the housing situation in Ghana. But for businesses into the manufacture of cement, an increment may be the only lifeline available to them in absorbing the shocks of the cedi depreciation. But what really could be the way forward?
If the economy improves, if the cedi appreciates, obviously it stabilizes and we are also able to compete effectively, then we will not need to go up, because if the only option is to go up, then it doesn't only affect us as a business, it doesn't put us in a very good position. Then obviously the people who are also buying from you also starts to buy less. So if the economy improves, if the cedi appreciates, then it's good for business. Then of course we can also work better.
It's not just the construction sector that is feeling the heat of the cedi depreciation. The hospitality industry is also reeling under the impact. Players in the space say the development has negatively impacted their cost of operations, and a lot of them lament that they can no longer plan and keep up with the changes in prices due to the fluctuation of the cedi. The cedi has been underperforming in an economy whose inflation rate currently stands at an alarming level of almost 32%. This coincides with downgrades of Ghana's economic ratings by international ratings agencies. The spiral effect is being experienced across various sectors, from the ports, the trading community, the mortgage industry, cement manufacturers, and even influencing investment options, as some have resorted to buying dollars with the anticipation of making gains should the cedi fall further. The hospitality industry is also under pressure from the economic situation in the country, and the general manager of the Coconut Grove Regency Hotel in Accra, Ralph Aite, is very concerned about the development.
We look at it in two ways. When people are coming into Ghana, or foreigners or tourists coming into Ghana, some of them will want to pay by foreign exchange, which really is the target of I believe the Ghana Revenue Authority and the government as a whole, because the entire hospitality industry is an export product for Ghana. So you expect to have those returns coming through. But then on the other side, you realize that most of the items that we use in our service, spoons, or let me call it cutlery, okay, crockery, plates, and a lot of the inputs come from outside Ghana.
His counterpart at Alisa Hotels, Kifalu Masha, says his outfit is now compelled to constantly review their rates to mitigate the impact of the cedi depreciation.
Generally, as a hotel or an organization that is well run in terms of planning, we have our budget, and our budget is pegged on a certain dollar rate. Now, with what is happening, you can expect if we had a dollar rate of 6 point maybe 5 during the beginning of this year, now we are moving towards even 9. So that definitely affects our way of planning, because then all the costs go haywire.
What could help improve the situation for businesses in the sector amidst the current economic turmoil, which is arguably influenced by global happenings?
Most importantly, we are hoping it's something that can be controlled, okay? When you do that, or when you have such a situation, it's difficult for you to expand your operations. It's difficult for you to be very profitable, and even it's difficult for you to hire more people and even expand your facility. Okay, so really the first thing is for you to see how best you can cut your operating costs. And really, you know, for the last, let's even say since 2014, it's not been a very rosy picture in terms of tourism. I'm saying 2014 because there was the scare of Ebola in 2014 that had a certain effect on travels to Ghana, or maybe West Africa for that matter.
As a country already, Ghana we have been facing issues of too much of importation. We import literally so many things. And probably where we should start from is where the government has always said one district, one factory. I don't know how far. I'm not a politician. I don't know how far that project has gone to. But I believe that's where the solution should begin from, where Ghana should begin to produce all these things that we are importing, especially as hotels, even things like butter, things like meat. I mean, you've got arable land here. I mean, unlike any other country I've seen. I mean, Ghana is so much well endowed. We shouldn't be importing anything. If anything, we should be exporting. So that's the solution where we should start from.
Another part of the Cedi depreciation conversation that's very worrying is the impact on the cost of food. Have you realized how a lot of food items have increased in price? Bread, egg, milk, sugar, you name it. They all have seen major increases in prices, and this is very challenging.
Sese ye bedwa loli fenti enima ne boa ye dindindindin yentimi nto sese ye ne yama ye hu ni ayenye anwa ne ye to anwa he anwa drum mimi ye dwadi ni ba ami di school mudwa sata ne ye to anwa 1.250 enanwa aka 20 cedi na 5 million wa Ghana aden o mine o hwe ni ye wan hwe ye dia e ma ye bekia ti abom.
The rise in food prices, which has largely contributed to the country's inflation this year, shows no signs of slowing down anytime soon. In July of 2022, food inflation alone increased to over 32%, a situation that many Ghanaians say is worrisome. Wholesale traders at the Okaishu market in Akwa's Central Business District tell me that in the last few weeks alone, the prices of goods such as rice and oil have gone up drastically, and these increments sometimes occur on a daily basis.
It was stable for a while, then just last 2 weeks, the increments started coming. So let's say for the past 2 weeks, almost every week we've been increasing it. Last 2 weeks it was 145, yeah. Then this morning we are now selling it at 2.7. That's 270 cedis. A customer will plan coming to buy 10 of the buckets, but when the person walks in and the price has been increased, instead of 10, the person has to reduce and buy either 7. So it's even affecting our sales. Yeah,
I am concerned about it because looking at in recent times, sales have dropped drastically because of inflation. And for instance, this Milo drink you were pointing at, we used to sell it as at December for 98 cedis. For 98 cedis as at December 2021, and then now it has gone up by, I think, 57 cedis. Now we are selling it at 155. It's just a Milo drink, milk, Milo, like everything. Only this year alone, prices has been increased. We are just in August, right? And then price has been increased for about 6 times.
And I did china this and no mutum. We bet na better this is your bed and no haba near Saturn. Sanet, intenu the price in shada ye fix say ebia oil no sa aha.
Na ya dey ntina mo amoto ade na na mo kamuti bom ka se we na ye be to price ni mo anase.
Da bi ntimi nyesa say omo mo mani nyama ni dey fi ama no ne ba no. Ubi so mo say dollar akweso. Nti dollar no mo de ko fan say dollar akweso so be say mo tutu nyama ni. So mo tuma yenso e betum. So mo etesa na yenso atese.
While traders are worried about the impact of food inflation on their businesses, buyers have also expressed concern about the frequent increment of food prices.
The prices have really gone up. I remember she sent me the prices yesterday, and then this morning when I came, it had gone up again. I was like,
how much was it previously?
It was 240, then it went to 260, then it went to 270. Yes.
It's like every time you come,
the price is going up every time, going up.
So what do you do when you come and the price has shot up?
It's either you buy less than what you want to buy, or if the supplier will be kind enough to give it to you, then come and pay back later. Or you would have to reduce the amount you add to. the whole processing. But then that will reduce the quality. So it's either you compromise or you raise the price.
All of the happenings with the Cedi depreciation compelled the Monetary Policy Committee of the Central Bank to hold a crunch meeting this week to review developments in the economy. The emergency meeting was critical to addressing the recent challenges facing the economy, but mixed reactions greeted the outcome of the meeting.
The increase in the monetary policy rate follows an emergency monetary policy committee meeting held by the Bank of Ghana on August 17, 2022 to review recent developments in the economy and assess the risk to the country's economic outlook. The rate, which is of keen interest to businesses, signals the rate at which the central bank lends to commercial banks. It is also used by banks to calculate their base rates. In a statement issued by the Bank of Ghana, it attributed the increase in the rate to the continuous increase in the rate of inflation, an acceleration in the pace of the depreciation of the cedi, as well as 2 downgrades of the economy from 2 international ratings agencies. Commenting on the central bank's recent decision, economist Dr. Patrick Esuming noted that the increase was expected.
I think from the very moment you saw the announcement that they are going to have this emergency meeting, you could tell what was coming, that they were going to raise the policy rate. It was a matter of how much. Well, we can that they've done 300 basis points. I think best case scenario, this will give us the cedi some temporary relief. I'm not sure that this policy rate hike does anything to resolve the underlying factors that are responsible for the cedi's recent sharp depreciation. Indeed, some points in the report they explain the factors that is driving so thankfully they were clear that it wasn't just external factors, but there is both domestic and external factors. It's not clear to me how this rate hike will address any of these underlying causes that they themselves identified. I think you can understand raising the rate will ensure that we are sort of compensating holders of our bonds for the loss when the currency depreciates. But that will only give us a temporary relief, I'm afraid.
Economist with GCB Capital, Courage Boti, who sides with Dr. Patrick Esuming, explains to Citi Business News the impact of the Bank of Ghana's decision on businesses in the country.
Definitely, and it is the reason Bank of Ghana held back on a rate hike, I believe, in July, because already growth outlook is seen. We saw 3.3 in Q1, and then government has had expenditure, discretionary spending by about 30%. There is the Ukraine-Russia situation and its impact on growth and, of course, resource inputs and all of that, plus the inflation depleting the real purchasing power of individuals and consumers in general. So all of these will affect aggregate demand and, by extension, growth in the economy. Now that we have had to resume a policy rate hike because inflation is under threat again and exchange rate is having problems at the moment, it brings back the question of impact on growth. And yes, growth could be impeded. Cost of credit is higher now for businesses or even government. Already interest rates for government are about 30%, which is very punitive, more than 2 times how we started the year. So it further worsens the cost of debt situation and it even increases the interest cost for government further for the rest of the year.
While we are still dealing with the economy and the depreciation of the cedi, it appears we will have to brace ourselves for more shocks. From next month, we will have to pay more for water and electricity. This is because the Public Utilities Regulatory Commission, PURC, has announced an about 27% and 22% increase in tariffs for electricity and water, respectively.
In May this year, the Electricity Company of Ghana proposed to the Public Utilities Regulatory Commission an increment in tariffs by 148%, with a 7.6% average adjustment between the periods of 2023 to 2026. The ECG explained that their proposal was aimed at recovering and sustaining its operational costs. Similarly, the Ghana Water Company Limited also proposed a 334% increment in its tariffs to be able to at least recover its costs. The GWCL contended that while the average tariff per cubic meter in 2019 was $1.27, same was reduced to $1.13 as a result of the depreciation of the cedi, which affected its ability to carry out repairs and replacements of aged and obsolete equipment and pipelines. At a media engagement in Accra, the Executive Secretary of PURC,
Dr. Ishmael Aka, explained factors that led to the decided percentage.
If you take Ghana Water, their investment over the past 10 years and how it has been, we adjusted this by inflation, again to compare with their figures. Then we invited them to come and defend, one, how much the investment will help them reduce losses, serve customers better, and improve their operations. So if you come and you don't really tell us, defend what you put in. So for instance, not Ghana Water, but let's say a particular utility wants to buy, let's say 10 V8 vehicles next year. How is that going to affect customer service? How is that going to reduce losses? If you can't defend that, we can't put it in, because at the end of the day, it's a two-way affair. What you want and what the customer can pay. And if the customer also feels it's not justified, we are the referee, we should not allow that to pass.
So are you saying they couldn't justify what they put in?
So, as I said, some of them, not everything. So, not that they didn't justify. Yes, I need this, but why do you need it? Okay, when we get it, it will enhance my operation. How will it affect your operation? So, these are questions we asked. So, most of them justify most of the investments, but some of them we had to take them out.
The upward adjustment for electricity tariffs affect residential and lifeline consumers, other residential consumers, non-residential consumers, among other categories. Lifeline consumers who utilize between 0 to 30 kilowatts per hour have witnessed an increase from 32.60 pesos to 41.91 pesos. Other residential customers who consume power between 0 to 300 kilowatts per hour are to pay 89.04 pesos as compared to 65.42 pesos. Those who consume above 600 kilowatts per hour will pay 128.40 pesos. Non-residential customers include hairdressers and beauty parlors or salons, barber shops, tailoring and dressmaking shops, welding, mechanic, vulcanizing and carpentry workshops. These groups of persons are bound to pay 83.78 pesos for consuming power between 0 to 300 kilowatts per hour. Consuming between 300 and 600 kilowatts per hour would attract 89.16 pesos, while above 600 kilowatts per hour would attract 133.09 pesos. How would ECG distinguish between lifeline and non-residential consumers who operate from home?
We are working with ECG to address two things. One, businesses in the house, and two, lifeline consumers who live in compound houses. So with the lifeline consumers who live in compound houses, I think what ECG wants to do is to implement what we call load limiters. When it comes to businesses that are operated in the house, I think we're also working with the ECG. They've started doing meter audit to know what you are even using the power for and all that. And after this audit, I think that some of these benefits can be rolled up. They can be charged as non-residential consumers.
Some Ghanaians are, however, of the view that the current economic situation is unfavorable for an upward adjustment.
This adjustment, eventually the poor is going to suffer for it, because looking at the current situation that the country is facing, higher inflation, our city is not doing well because of the dollar rate. Now, as of yesterday, the dollar has increased, okay? So eventually the city is going to depreciate. And looking at the economic factor now, and this utility has been increased, it's going to be a higher blow on the economy.
First of all, the government should have been increased with the workers our salary, because we are in hard time. We pay school fees, we pay water bill, we pay tariff, electricity, etc., etc.
But the Ghana Water, for instance, asked for over 300% increment, and PRC has brought it down to under 30.
It's still unfortunate for Ghana Water, because you walk around and you see some water leakage somewhere flowing just like that without doing anything about it for about 1 week before maybe the problem will solve. So if only this thing will come on now, it won't favor us with the workers.
With all that is going on, one can't help but be concerned about the local industry. How are businesses in the space faring amid all of these challenges? No wonder the Association of Ghana Industries, AGI, believes the government must be deliberate in introducing policies and programs to support industries and businesses. According to the AGI, this is one of the best ways that the country can overcome the current economic crisis.
The 5th edition of the Ghana Industrial Summit and Exhibition is an initiative of the Association of Ghana Industries and supported by the Volta River Authority, Fidelity Bank, Nuclear Power Ghana, and other partners. The event seeks to establish and encourage networking between businesses and to engage key government agencies in a constructive dialogue in search of viable solutions to challenges facing industry. Speaking at the event, President of the AGI, Dr. Humphrey Eyimdake, reiterated calls for the introduction of deliberate policies and programs to support industries. According to him, this is one of the best ways that the country can overcome its current economic crisis.
It is imperative to emphasize that the solutions to Africa's economic and industrial development lies in the domain of the private sector. As the refrain correctly goes, the private sector is the engine of growth. Successful businesses create jobs, pay taxes that finance services and investments, and ultimately drive growth. The private sector generates nearly 80% of jobs, funds about 60% of investments, and provides over 80% of government revenues, making it a viable and profitable investment spot. Currently, investment in Ghanaian industry is unpredictable, considering our prevalent economic dynamics.
Minister of Trade and Industry Alan Chomateng, delivering the keynote, assured of government's efforts to promote industrialization and economic development.
In 2017, when we took office, we had no doubt in our mind that the way out of the challenges that confront our economy is to industrialize. And it's against this background that we developed a comprehensive and arguably the most ambitious program for industrialization since independence, which is our 10-point industrial development agenda. And because of want of time, I'll just focus on a few of them. First is the One District, One Factory initiative. Again, in spite of all the reviews, some negative, some positive, the evidence is clear. If we are talking about promoting exports, if we are talking about import substitution, then the answer lies in projects like the 1D1F.
Head of Cooperation of the European Union delegation, Massimo Mina, highlighted the need for a stable and predictable investment climate to attract more investors into the country.
The European strongly believes that investment and investors in the current times should not look elsewhere than Ghana. This is the reason why the European Union has heavily supported the Development Bank of Ghana with 170 million euro in order to stimulate investment and stimulate local businesses. This is the reason why the EU is heavily supporting the African Continental Free Trade Area. And considering the current macroeconomic context, private sector development is indispensable. Creating the proper conditions for businesses to thrive is the soil that a prosperous Ghana will grow from. What when do companies need?
The 5th edition of the Ghana Industrial Summit and Exhibition 2022 was under the theme Investing in Ghanaian Industries to Leverage Opportunities in the Single African Market.
The challenges of local industry doesn't end there. They now have to deal with the influx of smuggled wheat flour onto the Ghanaian market. The Importers and Exporters Association of Ghana has expressed worry over this development. According to the association, the flour which is being imported from Ivory Coast on the blind side of customs officials could be unwholesome. In addition, it could also negatively affect local wheat flour producers who have to compete with the low costs of the smuggled ones.
The influx of smuggled food products onto the Ghanaian market has been a challenge for stakeholders in the industry. Commodities like rice, wheat, soya bean meal are among the most common foods smuggled. The Importers and Exporters Association of Ghana say, per their investigations, they have noticed the influx of wheat flour from Côte d'Ivoire and Turkey on the Ghanaian market. According to them, these products are being sold to Ghanaians without the approval of the Food and Drugs Authority.
We have influx of smuggled wheat flour in the market that is giving them, posing a threat to the manufacturers. The Ivorian government have given some tax exemption to the wheat importers. In their country, like Ghana, we have our millers who are also importing wheat, and they have to pay so much duties, taxes, and tariff to the state. Come and mail it and don't have the market. In the Ivory Coast, it's not like that. Ivory Coast realizes that the food prices, because of the global issues that we are all battling with, have given tax exemption and have made it a point that they should produce it at a cheaper rate for their people, their national. And they've banned it. They said that production should stay within their country, but it found its way here. So if you import the wheat, they have not paid duty. They are produced at a very subsidized way. They are supposed to consume by their nationals. Because it's lower cost, it found its way to the Ghanaian market, and those are people, the wheat millers who bring in their wheat, pay the duty, go through this high tariff cost of doing business to produce it. They are now, their products at the market, and they have no market share. Our checks, most of this flour is entering into the country through the unapproved entry point, with custom failing to exact the taxes, fees, levies, and charges on them.
Citi News visited the Kaneshie market in Accra to verify this information. One of the brands of the wheat allegedly imported was found in a flour store, but the owner refused to speak on record. Other traders of the flour, who confirmed the presence of these smuggled wheat flour on the Ghanaian market, explained that, despite it being cheap, it's unable to compete with the locally manufactured ones.
When flour we dear yempe omudiba ya de pam ni duko won ya adwene nya ye tama nti we ba e pom se yempe no e se enko
nti nya wo pa chene se wehu we mu da e wo market ni mu na
e wo ya e se omudi aba be che lenso yempe se ye beto enu de
anenti na mo mpese mo beto
ayeti se ade nu obi awo di ope cosmos on beton o mu di ope ti se wa kasa saa ka che ni se fine o ba kasa bre iti ade a o mu nim nu enu na ye kwa Accra koto we say we di o ba kasa saa asa is fine dey be ma o long problem iti dey wa onum tama anyway na ye to
me hu bo market mu da ma to ma like Canada.
Uni baby.
Oh, buy Abidjan flour. Oh, sometimes I buy a share date nansa. Yeton. Date na share. Obi wa ho na ma bebre. Nti tomato about 5 bags. Nti beto 1 bag per ako. Oko try na ya next time oba obeto. Oh, upon all that, Ghana dey move sing Abidjan dey no.
The Importers and Exporters Association of Ghana is therefore calling on the FDA and the custom officials to, as a matter of urgency, investigate the matter.
So the FDA, they've been doing very well, extremely well. They have a surveillance department, and we are appealing to FDA. They are our friends. We are friends to them to send their surveillance into the market and crack the whip. And we are also appealing to the custom to also send their monitoring team to the market to make sure that they get those who bring this unapproved smuggled goods into the market, to get them and assess them and see if possible, they probably have to place a ban.
We turn our attention now to the Vehicle and Asset Dealers Union of Ghana, because it says they will resist all attempts by the government to implement the Customs Amendment Bill 2020. The association argues that the bill, when implemented, has the potential of collapsing their businesses. The dealers lament that despite several engagements with the government to halt the implementation of the bill, the government has announced its intention to begin the implementation from next month.
The members of the Vehicle and Asset Dealers Union of Ghana are kicking against the implementation of the Customs Amendment Act 2020. The VADAC members insist that their businesses are already on the brink of collapse due to rising interest rates, high inflation and burdensome taxes. Therefore, the implementation of the law will wipe them out of business. The law, which aims to provide incentives for automotive manufacturers and assemblers, will also prohibit the importation of salvaged motor vehicles and specific vehicles over 10 years of age into the country. But the car dealers insist the law will only benefit foreign manufacturers to the detriment of local car dealers. Frank Atanli Kofiga is the General Secretary of the Vehicle and Asset Dealers Union of Ghana, and he says they want government to rescind its decision to implement the law.
Simple explanation is to discourage us from importing vehicles.
Did they say that?
He was very blunt about it.
Did they tell you that?
Very, very blunt. They were very emphatically about it. They didn't miss words at all.
And why do they want to discourage importation of used vehicles?
Yes, to them, investors have brought in a lot of cash. They want to boost investor confidence by giving them those incentives and for them to be able to thrive in the market. But to us, we don't think that is the right way to go. Right. We have shedded a lot as part of the agreement we had with them, of which the standardization or the standard authority came in to sort of jaw with us and then put together the standardization for the market to kind of sensitize the market and give us some incentives, and then give the brand new assemblers also some incentives. So I think there's a need for the government to look at the documents we put together with the standard authority and ride behind that. I think that will give us a safe haven and also give the assemblers also a good market to also do their job.
Vice President of VALAC, Brian Selby, also made a passionate appeal to the government to intervene in the matter in order not to collapse their businesses.
Plain Range Rovers, like Range Rovers maybe 2020, 21, 22 for like 100 and something. But now it's 380,000 for duty for a Range Rover then 2022. I mean, how much would you sell the car? The exchange rate was lower, so we were telling government to peg, let's say, okay, even if exchange rate goes higher, maybe government should peg the exchange rate at maybe 8 cedis or something like that. So we know that for maybe 1 year or 6 months, we are paying the duty at a peg. So if it goes high and comes down, we don't get affected. Also, our problem is that these are foreign people who are coming to open vehicle assemblies in Ghana. But I am just thinking that government should be interested in us, the citizens of Ghana, first. Because the citizens are the ones that I don't expect that I go to London or I go to America and I go and open a vehicle assembly and the government in America or London will break the citizens of the British people's business to favor me, a foreigner. So I'm not saying it's fair. I mean, everywhere, every country in the world, they favor their own people. So we are just begging government, because this is the only business we've known for years. We don't know any other business. So we are begging government not to destroy our business.
Kwesi Bediako is also a car dealer based in Accra, and he said the implementation of the Customs Implementation Act 2020 will cost over 15,000 people their jobs.
Right from the port, there's an agent that makes money out of it. The tow driver makes money out of it. We bring it to the garage. There are air conditioning people who works on the bodywork, the mechanics and all that. So if the government is just going to the way the government is coming out, we can only see that they just want to take us out of business. So the moment you go out of business, there are so many people who are also going to lose their incomes because most of them depend on us.
Let's now talk about fuel. Did you also have a challenge with getting some of the products to buy at the pumps during the week? It didn't end there. Next thing we realized was that prices at the pumps also shot up. I must say this was disappointing after it had dropped slightly at the beginning of the month. But what could be the reason for all of these developments?
The situation has left many consumers stranded and compelled them to travel longer distances in search of fuel. But the Chamber of Petroleum Consumers Ghana (COPEC) is of the view that there is enough stock in the country to last a month. Head of Research at COPEC, Benjamin Isia, clarified that the seeming shortage is a deliberate effort by some of the oil marketing companies as part of plans to hike prices at the pumps.
If there's any observation of that event at any of the retail outlets, the shortage at these retail outlets is not caused by the lack of products in Ghana. As at July, we had about 186 million liters of diesel. That could cover about 4 weeks, 3 days. And we also have about 182 million liters of petrol. That will also cover about 4 weeks and then 2 days. So at the depots, there are a lot of products. However, what happens is that whenever there's going to be an increment in the price of petroleum products, some recalcitrant dealers at some of these retail outlets intentionally create an artificial shortage so that they can increase and then make revenue or profit out of this particular event.
His outfit is therefore calling on the National Petroleum Authority to sanction such retailers to discourage the act.
COPEC has always been mentioning this particular event to the authority, that is MPA, to make sure that when prices are going to change, they visit some of these retail outlets to check their tanks and make sure that there are products available. So if any retail outlet comes to tell you that there are no products, it means it is an intention by them to create this shortage. And for that matter, they should be sanctioned.
Meanwhile, consumers of fuel should expect to pay more at the pumps as the price of the commodity has increased at some retail outlets in the country. Some fuel stations have begun to post an almost 2% increase in their prices, causing petrol to sell for 11 cedis 15 pesos and diesel for 13 Ghana cedis 15 pesos per litre. This is despite an earlier reduction in the global price of crude oil, which saw a drop in the price of petrol and diesel to 10 cedis 95 pesos and 13 cedis 97 pesos per litre at the pumps at the start of the month. Benjamin Sia is the head of research at the Chamber of Petroleum Consumers Ghana (COPEC), and he explained that the hikes in prices at the pumps, despite the global dip, is largely due to the depreciation of the cedi.
The price variation between the projected by COPEC and the actual market price or retail price of petroleum products has to do with the competition in the market by the BDCs and also the specific cedi equivalent of dollar that the particular BDC got from a commercial bank or the central bank that aided in this computation of the XREF price. So we at COPEC still believe that prices were not expected to surge. However, because of the depreciation of the currency, that is the Ghana cedi against the dollar, that is why we are observing certain price surges. And we say so because on the international market, prices have declined continuously for the past 2 windows by about 25% for petrol and about 18% for diesel. And if prices on the international market are declining, we expect that locally prices will also decline. However, because of the depreciation of our currency, we are not getting those price declines at the pumps.
With all the hikes in the price of fuel we have had to deal with, the worst thing that can happen to consumers is to be ripped off at the pumps. As part of efforts to deal with this, the National Petroleum Authority (NPA), during its pricing quality workshop in Kumasi, has encouraged transport operators to report fuel stations they suspect had adjusted their pumps to their outfit for the appropriate action to be taken.
In July 2022, the National Petroleum Authority closed down some fuel stations in the Western region for engaging in actions that violate its regulations on petroleum products and prices. It is in view of this that the NPA is liaising with various transport unions to help report fuel stations that engage in some of such suspicious activities for investigations to be launched. As part of this, the petroleum regulators have educated transport operators on quality of fuel and its prices at a workshop in Kumasi. Speaking on the sidelines of the workshop, a Deputy Chief Executive of NPA, Linda Asante, noted that the NPA believe the education the drivers have received will encourage them to report fuel stations that flout NPA regulations in order to avoid being cheated at pump stations.
So, National Petroleum Authority, as you may be aware, our mandate is to regulate the downstream petroleum industry. And we also check the quality of petroleum products that is delivered onto the local market. We also check that the price of product that the consumer pays for is within the prescribed pricing formula. So the idea for this program is to educate the drivers what to look out for when they go to the filling stations in terms of quality of products, in terms of the quantity they pay money for.
The leadership of the Ghana Private Road Transport Union, GPRTU, has expressed excitement over NPA's decision to educate its members on fuel quality and its prices. According to the Public Relations Officer of the Ashanti Regional Branch of GPRTU, Mohammed Abdulrahman, this is a good step in involving them on issues of petroleum products.
This workshop is very much important, most especially for us as transport operators. Looking at the current situation in this country, where fuel prices keep on rising day in and day out. Today that the NPA are with us here, who have educated us on the need, on how best the fuel increment and the quality of petroleum in Ghana is all about.
The Executive Secretary of the Chamber of Petroleum Consumers, Duncan Amwa, called on the NPA to ensure the expansion of the initiative in order to give transport operators the avenue to share their views, which would likely guide policy making.
The people who buy petrol, the people who consume fuel, Monday, Tuesday, Wednesday, Thursday, are the very drivers that we have engaged today. The more we explain to them, the more we take feedback from them, the better this is. And we are happy that the NPA is taking these steps. It should expand across the country so that more and more of the drivers get to understand what is fuel, how do you complain when you feel cheated, when somebody is doing something that you don't like at a filling station, the complaint procedure.
Well, that'll be all for this week's episode of the Business Weekly Show here on Citi TV, your most watched business show in the country. For more business stories, check out our website, citibusinessnews.com. But I hope you're preparing for the This is Ghana Fair, which is happening on the 27th and 28th of this month at the Accra Metropolitan Assembly from 10 to 5 p.m. sharp. If you'd like to exhibit on the day, please call 020-5973-973 for all the information you need on the This is Ghana Fair.